Ha ha ha.
Damn. Oh, wait, hold on. Oh.
No, I see what you mean off the get-go.
Right.
How are you?
All right. This is my first time. Well, I've Zoomed before. Okay, I like that. That's a little bigger.
Nice.
Zoom before, but now I'm trying to learn how to Zoom because we're going to do this for my clients in the tax office.
Nice. Okay, cool.
That will have some, with it getting worse, we think that people won't be there for COVID. I told Jeff to bring me up wine. So if you see someone walking in, it's someone bring me wine. Hey, Jeff, can you bring me up a glass of wine and one for Nick too? So yeah, that's cool. Yeah.
Nice. Well, I love talking finances. I need to be schooled more in just like the tax arena.
Okay.
So I've accumulated like a bunch of expenses. I kind of have questions about, how I should go about the next, I don't know, even decade, reinvest everything that they get. And that way they can propel growth and,
Sure.
I would love to take the photography business and propel it all the way to making movies at some point.
So eventually you'll have some really expensive purchases.
Exactly.
Jeff, that's Nick.
Hey, Nick, how are you?
Hey, Jeff, how are you? Cheers.
Oh, there's the puppy.
What's your dog's name again?
Oh, Cashew. He's
Cashew.
Doing dog stuff right now.
Hey, Cashew. Sounds like you've started that plan, right? So the biggest thing over the next many years is tracking everything, your expenses and your income, everything. I have people that will come in in tax season. I'm like, oh, hey, I started this little business. I'm like, how much do you make? Oh, I made $18,000, but I spent a lot of money. And I'm like, okay, where's your receipts or where's your totals? Oh, I was supposed to keep that. I'm like, how do you have money? How do you make money? And then I have clients who make $400,000 and $500,000 a year gross, and they still net a couple $100,000 a year. I'm always impressed with a small business person that can do that. I have a plumber that started kind of what you did, right? So he's starting out a new business. He was a plumber first, but he worked for a company, and I'll say that he made in the $40,000 to $50,000 range. I can't say names, but I'm just going to say this is what he was making on a W-2 for years for a company. He went out, and he's now in his second year of business. He made a little over $300,000 last year with almost $200,000 in profit.
Wow.
That was really crazy numbers. I'm looking at him, and he's like, yeah. And of course, he has a big tax bill with that. And we've sat down and taught him some of the, like he uses QuickBooks now. And that's where I'm going to try to gear you toward. And as your business grows with like something like QuickBooks, where you're going to be entering in, let me see if I have one here. How much is this one? It's $81. So, little receipts like that.
Okay.
I just, they seem overwhelming to so many people, but on your QuickBooks, if once a day or once every 4 or 5 days, you grab your receipts, you enter them in under the categories. And then when you come in, you go, hey, I billed out $40,000 in photography this year. Okay, great. But I spent $22,000 on equipment, which that's going to go into a separate category that we'll talk about in a minute when you ask about that, because that we can depreciate off. We can take it against your income for 4 or 5 years, because it's you can either take a big hit 1 year and then not pay any taxes, but the next year when you say, hey, I made $60,000, but I've only got $5,000 in expenses. Well, if you allowed that depreciation to work where you depreciate it over 5 to 7 years, depending on the type of equipment, then you can use that same that expense over time. Now, a lot of times in a small business, you need kind of the capital to keep rolling. So you're like, I'd rather not pay taxes this year. And sometimes that's very smart. And it just depends on the business. But even if this was $1, this is $80. Mm-hmm. $1, I still enter in my business, and then I stick it in a folder and I forget about it. I never think about it again. And in an audit, then they say, oh, you said you had $2,500 in office expense, right? And you're gonna say, yeah, here's my receipts. And they should total 2,500, which is another instrument. And if I'm talking too much, just say, hey, Arthur. But the other interesting thing is when I get a small business comes in and they'll say, oh yeah, well, I spent 2,500 on advertising and I spent 1,000 on an insurance and I spent $700 on film and my camera was $5,000. I'm like, bullshit. You know what I mean?
Sure.
There's no way to always have that rounded number. That means you've got someone who's guessing at everything they do.
And then as far as tracking stuff with QuickBooks and whatnot, would you suggest getting some sort of business credit card?
So the IRS would love that, is if you had a credit card dedicated to, and because you're a brand new business, getting a credit card in the business name might not be easy. So it might be easier for you to say, okay, I'm gonna, I've got 2 credit cards or 3. I carry 3. 2 are for personal. 1 I run 90% of the business through, and it makes it easy for tracking because then at the end of the month I'm like, okay, tax time or real estate, tax time or real estate. But the QuickBooks, realistically, if you were ever audited, the IRS wants to look at you and go, okay, Nick, you give me this spreadsheet. And it said, hey, I made, 50 grand and all my expenses were $15,000. And then, which we haven't talked about is mileage. We'll go to that next. But the 15,000 that's lined out, you're going to say, well, I bought liability insurance because I was filming on someone's commercial property and they said, do you have insurance? So you're probably going to need liability insurance. You're going to have office supplies, printing, things of that sort, advertising. So if you bust out and get a website to promote yourself, which I think every business that's out there today needs a website.
I agree.
If nothing more than to legitimize that they're a business, because people think when they look online, oh, they've got a website, they must be good. And so all those different expenses, you're going to come in and you say, okay, Arthur, on my my web design, my web page, the 4 ads I ran in this internet, that came up to, $1,822. And then in your particular, do you actually produce film or products in the sense of, I guess if a headshot, you'd be give them actual copies, right?
No, no printing.
No printing, yeah.
I mean, I guess I can maybe work something out with maybe Jim or something like that, and
sure. Yeah. So most of it, I mean, even like in the houses, right? I don't print it. We just download it in my system. I put them all online.
Yeah.
Boom, boom, it's all to go. Okay, so not a lot of printing costs for you. Your cameras, we talked about depreciation. Your next biggest thing where a lot of people really do a crappy job is your mileage. So your business right now is based out of home, right?
Yeah.
Business.
Exactly.
Your address where you conduct the majority of your business, even though when you go out and do a shoot, you're going out there, but you're running your business from home. You're marketing it from home. You're doing your accounting from home. You're editing your pictures and your photography from home. So now you drive out to where do you live in LA?
The Valley, North Hollywood.
North Hollywood. Someone calls up and says, hey, can you come to San Diego? I've got this major shoot I need you to do. And, it pays well, but you drive all the way down there. That's 100 miles, something like that, maybe a little bit more.
Yeah.
So round trip, that's 200 miles. Right. Well, that right there, just on recording your mileage, would take $100 off of that income. And when you say, oh, okay, the benefit is for every dollar that you come up in expenses, it means that's the dollar you're not paying taxes on, right? Have you got your EIN number?
No.
Okay, so it's really easy. You'll go out to the irs.gov website and under search, just type in EIN number. And that will give you, once you register that, you're going to register as a sole proprietor. It's going to give you a tax identification number. That number you want to write down in like 5 different places and never lose it, because, and you can keep the IRS page that has that number. You'll get it within a couple weeks.
Does that need to be private?
No, that's the number you want to share. So say you came and worked for my firm, and I'm a big photographer company, and you wanted to come work for me, and I said, hey, can you go do these 4 shoots? And you make a couple grand, and I send you a 1099. Well, guess what I'm going to ask for? I need your tax ID number. So now you're giving me your social number. So that means, say you got 20 1099s this year from different companies you work for, and they've all got your social security number. And that means there are people that work there can see your social security number.
Sure.
And so the EIN number is for a self-employed person like yourself, a Schedule C small business. So you're going to use that EIN number as your tax identification number for your business. And did you get a business license or no business license? No. So I don't know about your city or county that you're in, if they require. Sometimes home-based businesses, most of them do require, it probably costs you $50. But when you start using that EIN number with that, the name of your business, then when you start receiving money, it's also going to be in that name. So therefore, you're going to have to file what's called a fictitious business name. And these are little steps that you'll take. And it depends on when you want to really do that, because then, of course, you're going to have to open up a business account under that name. They'll want to see a copy of your fictitious business name. They'll want to see your EIN number, including probably the IRS letter that shows that that's your tax identification number. And then that's a good way to start building a business. If you're going to be the person, so another small business that would be easy to relate to, completely different than yours, but an Uber driver. Now, if an Uber driver was watching this and says, God, I got to go do all of that, I'd say, hell no. They're never going to have drivers working for them.
Right.
Most of my Uber drivers don't make a tremendous amount of money. I mean, it's usually a side gig, right? So do they need a business account? No. So this is different. But a business that might grow, like what you're talking about doing, and expanding and making that 10-year plan and saying, hey, this is my goal on income this year. This is how I'm going to get there this year, is to do the small business stuff. And people will say, oh, should I incorporate? I'm like, hell no. Let's make sure you can run a business before you start incorporating and paying more in taxes in the beginning when you incorporate than less in taxes. So those are little things that I would suggest too. So you're doing it absolutely perfect. Start off with the small sole proprietorship. Then you're going to use the the tax identification number. That tax identification number does another thing for you. Remember that website?
Yeah.
That says you're a business? Having an EIN number, a tax identification number that you give people versus a social security number, confirms that you're a business. When you receive checks from a business that go into the business account, all of a sudden they're dealing with a true entity, not just a person, not just an Uber driver, right? Or not just someone that says, oh, I'm going to do photography. Well, I'm going to set up it a little bit more. I'm going to have QuickBooks. I'm going to know the nice thing with QuickBooks, and I can tell you personally, because I run 2 companies, because I'm a broker for real estate, and then I do the tax offices. So I can tell you at any time how much money I've made. And if I'm going to be broke, I can tell you. And you see big watering eyes. And I made some good money this year, and it's been sweet. So I have a very, very blessed life. I have people that come in, and they don't know the first thing about the accounting end of their business. So you can be the very best photographer out there, you can be the very best welder out there, you can be the very best contractor out there, but if you don't know how to handle your books, eventually that catches up with you and you find out, wait, I'm not making any money.
Yeah, that's interesting. I feel like, so for this year, since I've already had like a crew, I wrote a bunch of my expenses out, and it isn't the standard deductions 12,000.
Now that is okay. So you're talking about two different things. So you're you when you start a small business, you have a tax return, the 1040, which your standard deduction is 12,000. That's 12,000 off of your gross income. But your Schedule C, which is going to be attached, is almost a tax form in itself. Well, it is a tax form in itself, but it attaches to that 1040. But your that business, and like you say, when you haven't used that in the past, right? You haven't used that EIN number in the past. Well, it's perfect. We're almost at the end of the year. So by January 1, you're going to have an EIN number. You're going to have a business account set up. You're going to do, and those things are, I mean, it's not like getting a business checking account is expensive. I think they're about $8 a month if you go to the right bank, right? So you're not going to spend a lot of money on that. And then when you pay yourself next year, say you do it full time, and you know, it's important and it's easy to track like this. You go out and you build $2,500 this week. You were just a baller. You just could not believe how busy you were. But you spent, 680 bucks. Well, then you really didn't make 2,500, nor should you pay yourself 2,500. So on a small business, when your taxes are filed, you're going to see that number at the top, and it's going to be like 50,000, 10,000 in expenses. So therefore you made $40,000, right? So let's say you made 48,000 profit. That means on January 1 of every month from your company, you were able to write yourself a check for $4,000, and that's an owner's draw. You don't want to get to the end of the year and go, wow, but I withdrew $60,000. Well, you only made 50. So you're going in the hole. You're pulling out more than what the business is actually making.
Right.
And I'll back into that a little bit about the mileage. Make sure you keep your mileage. The mileage trackers on the phone, there's just a ton of those. Every time you leave your house, it'll track you, and then it's going to say, oh, you went to San Diego and back. Now, if you went to San Diego and back to party, well, that's not a deduction. But if you went down there and partied, but you also did a photo shoot, then that is a deduction. And so it's going to ask you to swipe personal or business miles. You go down to Save Mart to buy some beer. Well, that's personal, right? So you just slide it to personal. And I'm using my fingers here. You slide it to personal, slide it to business. At the end of the year, you look at your phone and it's going to say you drove 8,000 miles for business, and you drove 8,000 miles for business, and you drove 2,000 miles personal. And guess what the beautiful thing is? In an audit, you're able to pull that information back up and print out a log on that. And that's why that's so beautiful, because during an audit, and then you come in, you say, well, I drove 8,000 miles. I'm going to say, wow, that's a $4,500 deduction. That just saved you $1,500 in taxes. That's a beautiful thing.
Yeah.
But then the IRS auditor sits down with you and you say you drove 8,000 miles, and he says, oh, where's your mileage log? Oh, I don't have one. You owe us $1,500, but that fast. So, I mean, you probably won't get audited when your income's not up there yet. But
interesting. I wonder how often you see an audit, and then since I haven't tracked my my miles the way I would have done it, or the way I'm probably going to do it, is I just know that, I went to Santa Monica and back to do a photography shoot. I went and I just Googled. This is pretty much what I've done for the most part every year.
Yeah, so that system does work. But the IRS doesn't allow you to just track your business miles. They also want to know your personal miles. That's right on the tax form. So it says your business, your commute, and your personal miles. So if I only enter in business miles, they get mad. So January 1's coming, and you also probably have service records on your car. But around January 1 of every year, you should look at your mileage, write it down. Oh, I've got 10,000 miles on my car. On January 31, I have 20,000 miles on my car. So I drove 10,000 miles this year. And I figured because I did 52 shoots, I only did 52, one a week. And I drove to San Diego for each one of those. So somewhere on a little calendar, and because you also will have invoiced that person, and so you know where you made that money at. So you're not going to just write San Diego. You're going to write 123 Nowhere Street, San Diego, California, 92108. And because the IRS knows you just didn't go to San Diego, you went to a location. So when you put that location in, then like you say, you do your mileage tracker. Oh, my house to there was 132 miles. So it's 264 miles for that trip. I did that same trip 52 times this year. So that makes it's not going to be that easy, but you see how to follow that. So you can do exactly what you're saying. So you can claim those miles, and the IRS, as long as you have some sort of log. So beautiful Google, you can print up the calendars and you can type in there, went to this address, and because your invoicing will match those type of places. Now, in my particular thing, as a broker, when I go to a house, I use a key card to get in, right? So that key card stores my mileage. Well, it doesn't store my mileage, but it stores that address, and I can print up months worth of showings. I throw those in my binder, and if they ever audit me, I say, well, these are my showings, and these are the miles it took me to get there. And that's why I claim that deduction. And so they'll back off. They'll be like, okay, that's acceptable. I did have a client who claimed 30-something thousand miles, got audited. They did knock it down some, but their company and he was a union worker, had to vouch for those miles. I mean, it was quite the hassle. I don't have very many people that claim that type of mileage these days, because I'm kind of one of those. I'd rather err on the right side than the wrong side. The wrong side gets you with a tax problem.
Sure, I gotcha. How often do you see those audits?
To be honest, so your chance of being audited is extremely small unless numbers don't fall within the industry standards, or it's such a small business. I don't think any of my Uber drivers, and I probably have 50 between two offices that come in, and I don't think any of them get audited. We're talking, it's a side business, so it's $10,000 minus $7,000 worth of mileage. Now, here's what's nice about Uber. When they show the Uber and Lyft, when they show, oh, you made $10,000, they also show, oh, we charged you $3,000 in fees. And then they show the mileage that you drove. So that one makes it very easy. And so the auditor, it's like, well, hand them over the Uber thing,
right?
The receipt. So that, which is kind of like a profit and loss statement built in, because they usually don't have a whole lot of other expenses. In your cases, you're going to have a lot of other expenses as you build your business. And I think that small businesses have some of the toughest time in marketing, which I'm not a key at. I remember, and I'm going to have to guess, I've been in business 26 years. I probably have not done advertising in 7 to 8 years now. But I used to have a very small budget, but I spent $25,000 a year on advertising for at least 10 years. And that was my goal, is to spend $25,000 so my business would grow. Excluding COVID year, and when I say COVID year, I'm only barely, probably less than 5% right now of last year's tax years. This year was just less than 5% off of last year, and that considers a major change in the American public, right? How people shop and how they go out. So I had my first down year in 26 years. but it wasn't significant enough to hurt the bottom line. And that's why I'm just tickled. So I was very happy. I'm like, oh my God, because it could have been much worse. I mean, restaurants, think about those.
Right.
Those owners are getting spanked right now. And so it's like, oh.
Multiple streams of income coming through
Sure.
real estate as well myself, and through
Right.
stocks. I do love day trading as well as having a long-term portfolio.
Yeah.
So I don't know. What are your thoughts on that?
Multiple streams of income are incredible. So when the tax business, as you know, is very busy for my type of tax business, because we're not, we don't do corporations. So we don't have a full year of business to do. We have about 4 months of business to do. And I've got to spread that over 12 months. It also doesn't always keep you busy once we're out of so my multiple streams of business are, one is I own 4 rental properties, and I became a real estate broker or a realtor in 1999. And so when my tax business does well, I've been like, okay, I could survive on that. And then when that other revenue stream comes in, the rentals, which have all done very well appreciation, because I have one down in San Diego, a couple up in Portland, one in Modesto, those are my long-term assets. So I don't really use any of that money. That money goes back to paying everything off. Then the last revenue stream, which is being a broker and selling real estate, that's either really amazing or it's just good. And the last few years has been like really amazing. And I'm like, Jesus Christ. So that's where, but and all of that's relative, right? So some people that you might meet in this world, oh my God, how would you live on a couple $100,000 a year? Oh my God. And they make that a month. So everyone's at a different level, right? So
Yeah.
You can pull in through day trading an extra $30, $50, $100,000 a year, which, look at the market right now, which it's almost scary, right? I look at my investment portfolio with my partner, and I'm like, oh my God, feels good. When I think of some other people, I'm like, damn, they got so much, right? You see the movie stars, and in any business that you do, you never want to price yourself where you're making what you can make per hour. Because if you're making what you can make per hour, you might as well go back to an hourly job. So for example, in taxes, especially in taxes, it could be a $200 or $300 tax return. I hardly ever spend more than an hour on a tax return. And I know no one's going to pay me that. And some people look at me like, damn, you got that done already? You're $200? I look at them and it's like, you're not paying me for how long it takes me. You're paying me for what's up here. So you're paying me for a particular skill. When I took my car in and I had to have it fixed and put brakes on it, and it cost me $700, they might have did it in an hour or in 30 minutes. I didn't care. I don't know how to do brakes. They don't know how to do taxes. And so you have to charge kind of for your knowledge because if you're charging, someone says, well, can't you do it for $25 an hour? I'm like, yeah, but you're not funding my retirement. You're not funding my vacations. You're not funding my wine budget. Right? So if you're that good at photography and you're doing 5 shoots a day and you're like, damn, I have just no time. Well, you don't want to be making, $200 a day. You want to be going, oh yeah, I'm booked out 3 weeks. And I've got a good example of a person. I'm booked out for 3 weeks. Calls are coming in every day. I am so busy. I'm making, $500 to $1,000 a day. We just put in some new cabinets, IKEA cabinets in our kitchen. They look awesome. The guy charged us $500 to install them. So I started talking to him, and I found him online because the people at IKEA said their contractors that they recommend or hire won't do that small of a job. And I don't know if you've ever put together a cabinet. No, that sucks ass. It's a lot of work. So this guy was here all day, made $500. And he said he was booked out for 2 months. All he does is install IKEA cabinetry. He goes in and does kitchens. He looked at our kitchen which is also IKEA, which is really, if you look on my Facebook, you can see it. I have awesome, we have an awesome kitchen, all IKEA, quartz countertops, looks like $1 million, but it's IKEA. So he goes, I would have done your kitchen for $2,500. We paid $2,700 back to when we had it installed. And he goes, my goal is it would have taken me 5 days because I don't work with anyone else. We had it done in 2 days, but there were 3 guys. So his pricing, he says, and he lives in the East Bay. He goes, I'll go out to Sacramento, a lot of East Bay clients. I like to make $500 a day. And that's my goal. I thought that's not a bad gig. You know, you do it 5 days a week. That's $2,500 a week. That's $10,000 a month. That's $120,000 a year for installing IKEA cabinetry. And there's a demand for it because there's several people online. So I thought, hey, he's got a good little gig going. You know, it's hard work. And he has become assembly line at it. So he knows which parts. I mean, he ripped those boxes all apart and stacked things in a certain way because I kind of, you know, was here when he was putting it in. I thought, wow, he's got a good little gig going. Are you on free Zoom?
Yeah.
So we should be getting cut off any minute. It will only go for 40 minutes.
Okay,
We probably got on a couple minutes after 5.
So then I'll wrap it up. I wanted to ask you two questions aside from finances. One is who's your favorite actor, and then the second one is, do you believe in aliens?
Yes to number 2. And favorite actor, I mean, probably like Brad Pitt.
Brad Pitt.
It looks good. That package is pretty. Or who's the guy in the FBI rogue guy?
Like Matt Damon? Matt Damon? Yeah, The Bourne Identity.
You notice that voice went way down.
If we're going off those standards, for me, it'd have to be probably Rachel McAdams or
yeah. Damn it.
maybe McAdams.
She'd work just fine, right?
Right. Arthur, how would people be able to find you if they wanted to look for you?
Arthur Burk.
.com.
Who else? Or a tax.
On Twitter?
Oh, they would probably find me not on Twitter, but maybe on Facebook. I'm Arthur Burk. Or my okay, so my webpage is taxtime. .tax. Hold on. Let me look. www.taxtime.tax. Yeah, no, that's it.
All right, I super appreciate it.
Thank you. Yeah, this was fun. It was my first time.
Yeah, this is my third Zoom.
I'm like a Zoom virgin.
Hey, well.
And I'm getting ready to do this for myself. In fact, I had, talking about Zoom, these are cameras for my office to set, because you know, those are desktops, so they're not like my laptop. I'm at home right now.
Yeah.
But these are cameras for both offices because we're going to Zoom with clients.
What kind of camera is it?
I don't know.
Nice.
Yeah, just a little webcam, little cheapies.
Nice. Good move.
So, like 40 bucks.
Congratulations on your write-off.
Yeah, right. All right. Okay,
right.
sir. Thank you. Thanks, Nick.
Thank you.
Are you coming for Thanksgiving?
I don't know. We were talking about that right now. So
Okay.
well, we'll see. If so,
If so, we'll try to see you guys. Have a drink.
Alrighty.